Real estate sales and GVRD continue to run at 20-year lows, but sale prices, they're doing something completely different. You're definitely going to want to check out this episode. Hello, everyone, and welcome back. Dan and Ryan here with eXp Realty. We are with the fastest growing brokerage in history. And as top producing agents, we are now giving back. We are helping other agents become better agents. If you're a realtor listening to this, we would love to have a conversation with you and see how we can help build your business, increase your production, and ultimately have some more fun. Click on the Calendly link below, book a 30-minute session with us. Okay, let's get into it. So as mentioned off the top, sales are down. We saw in the month of October, just 1,903 units sell. This is a 45% decrease from this time last year, which essentially has been the conversation for about 4 months in a row now. 45% decrease in sales. Things have obviously peaked, things have obviously dropped, and we continue to kind of see this 40% lower. Compared to last month, though, we actually saw a 13% increase in sales. Very untypical to see higher sales in October than September, something that's going to set the tone for the rest of this episode. When we look to the 10-year average, no surprise, we are well below, sitting about 33% below that 10-year. Last month was the lowest sales for the month of October, dating back to 2008, the good old global financial crisis. That year, we saw HPI drop 11% before bottoming out. Keep that number in mind as we get into prices a little later on in this episode.
Very interesting data, Dan. I mean, I know we typically look to and try and find patterns and cycles, and it just doesn't appear like that's the case through this rate hike cycle that we've been through. I mean, naturally, with the most aggressive rate hike cycle in history and the sharpest decline in housing prices, it's no wonder nothing seems to make any sense. But especially with that, welcome back, everyone. This week, Ryan Dash here, joined by my business partner, Dan Wardle. We run a real estate team out of Vancouver, and we make educational YouTube videos for our online community. It's very, very difficult to make sense of what's happening right now. So the more we talk about it, the more we understand. And guys, please, if you could give us a thumbs up, hit the bell, hit that subscribe button. It helps the algorithm and other awesome people like yourselves learn from what we're doing. And again, if you want to book a session with us, it's free. There's a Calendly link just below. Click it, book it, we'll chat. All right, let's get back into listings. So listings, 4,033 new listings in October. That is actually about a 0.5% decrease compared to October 2021, and a 4.5% decrease compared to September. So we are losing inventory here, and no one's listing, Dan. And it's in this, like you said earlier, this whole conversation is going to be ultimately about inventory right now, because it's what's really driving the marketplace outside of the flow of credit. And when we look at no one listing their property and you think, why is no one panic selling? Well, over the last 2 years, everybody got rates that are rock bottom rates. Even people who had no intention of selling their homes, they've actually backed right off of the market. They went out, refinanced, got a crazy low rate, and they are sitting pretty right now while they go through this process. So you're not going to see a ton of panic selling right now, because people don't have to, especially if they locked into 5-year rates or longer. That piece of inventory, that product, it's not coming to market. And so what you're going to likely see more than anything are the new home sales that are going to get, unfortunately, pummeled with this, because anyone carrying inventory right now, anyone borrowing money to carry inventory to bring it to market, are now paying rates that don't make any sense. And they are going to need to unload this property just to get through. So you're likely going to see a whole lot more movement out of the new home sale market than you are out of the existing one. And I think that has a lot to do with our inventory numbers.
And for the people who are buying now, we're seeing a huge spike in short-term fixed rates, 1-year fixed, 2-year fixed, because the sentiment is the average person fully believes that interest rates are going to be dropping, will be lower at the end of those 1 to 2 year fixed terms. So that's what we're seeing. Sentiment is kind of swinging back into the positive realm. Again, likely thanks to the fact that we have our second lower interest rate amount from 1.75 to 0.5. I digress. Okay, let's talk about inventory, because inventory is the story, and it still is, and it has been now for about 5 or 6 months. We're still, end of October, under 10,000. That's the threshold. So we sat at the end of the month at about 9,800 active listings. It's been in and around there basically since May, but jumping between 10 and 11,000-ish. But again, it's kind of got this glass ceiling that it simply can't break through. We only saw about a 10% increase in inventory from last October. And that, if you remember, was when prices were going absolutely parabolic. Things were going bananas then. So there's only about 1,000 more listings now. Actually, it's 940 than there were this time last year. So still a very, very, very tight market. About 1.2% decrease from last month. So inventory even now is shrinking at a time when you'd think there'd be a flood of inventory. It is going the other way. We've actually seen inventory decrease for 4 months in a row now. A quick reminder, the rest of Canada is increasing greatly. Ontario, last time we touched on this, had an inventory increase of about 89% compared to this time last year. And here we are in Vancouver, we're only seeing about a 10% increase. So very different city. Vancouver is not normal when it comes to housing.
I was just going to say that. That is not normal. We can't, where part of our market goes through such a massive shift. And then over here, you're just seeing it's its own microcosm of what's taking place, comparatively speaking, to the rest of the country and the rest of the real estate market. It's got its own reasons for sure. I mean, we've got our own geographically locked, land. We can't sprawl like Ontario can, for example. So we have our own constraints, and a lot of people, they forget that and forget how resilient this market really is. And speaking to that, the sales to active ratio, which is my favorite one to look at, buyer behavior, seller behavior, we are teetering, Dan, on a seller's market. Teetering, right? We're at 19.3%. Now, that is a 2.5% increase from last month. And this is the 4th month in a row where we've had a balanced marketplace, with it never dropping below 16%. Remember, that's a 12 to 20% for balanced, right? So if we're sitting somewhere in that 16 to 20% range, it's a balanced seller's market. It's not a balanced buyer's market. And some of our anecdotal stories, which we can speak to later in the episode, show that. I mean, Dan had a listing that popped off in one day here. Anyhow, with that being said, we don't really see a chance of a buyer's market, even in the current landscape, taking place. I just don't understand how it could with such low levels of inventory. And with the activity that we're seeing, the demand levels are still up there. They're still pushing. And when we start talking about immigration here in the next little bit, you'll start to see that this is a finite opportunity for buyers in the next 6 to 12 months. Anyhow, so it's breaking it into actual asset classes here. If we talk about detached homes, this is the 3rd month in a row where we've been in a balanced market, 14.3%. Right, so sitting roughly right in between 12 and 20% here. Townhomes, we're at 21.5%. So definitely back into a seller's market now. And apartments haven't changed. Still in a seller's market at 23.2%. And you got to remember, this is the most affordable asset class. So as things got hammered at the top and people got priced out, they all flooded into the apartment segment. And so now, we haven't actually seen condos enter a balanced market in this entire cycle. I'm not sure we will, so long as demand levels and immigration stay elevated. It's been a very, very interesting month, all things considered, especially with the rate hikes we've seen.
All 3 property types had their sales to active listings ratio go up last month. Again, not normal.
No, not comparatively speaking anyways.
Ah, my goodness. Okay. So we talked about price doing something very different last month, and this is very key for you to pay attention to. HPI price, the average home price today in Vancouver, $1,149,000. Still very elevated. It did drop again, the HPI. Last month, I predicted it would drop 0.5%. It happened very in line with expectations at 0.6%. That is a lower amount than it's been since it started to drop. So it only dropped about $6,400 last month. We're still up from this time last year, about 2%. Since the peak, we are now officially down with the HPI 10%. We're back to like December 2021 prices here. But of course, it's a heck of a lot more expensive than it was back in December, because you got to think prices are down 10%, but buying power is down about 30%. So there's obviously a big discrepancy there. So you'd think with that buying power down, as far as what people can't qualify for mortgages, that prices would be dropping faster, but they're not. And here's where it gets super interesting. The median price increased $40,000 just last month. It's at $920,000. That is the first time median has gone in the upward direction in 7 months. So we're now sitting at the median is down 8% from the peak, which was 7 months ago in March. It's down 80K off the peak, which brings us back to like May, June prices of just this year. Average as well. So the average home price right now, $1,243,000, also up $8,400. But that's the second month in a row that average prices have gone up. We're now up $52,000 average in just the last 2 months, because it went up $44,000 back in September. Mm-hmm. Just like the median average, because of its return here, is now sitting at only 8% below the peak. They bottomed at 10%, and now they've cycled back up, which is mind-blowing to think that it's done this. Quick prediction, because my last one was you. Yeah. So quick prediction on HPI, because last month was very close. It's going to be absolutely flat for the month of November. You're going to see zero change in HPI for next month. But Ryan, let's expand on this. Like, why the heck are prices increasing with this landscape when we're seeing things fall off cliffs basically across the rest of Canada, yet here in our super bubble within a super bubble within Vancouver, things are going up?
Well, for sure we have a micro market, right? We have pressures inside of our market that don't exist nationally. We talked about the geographical landscape. You can't go south, can't go west, can't go really north. You can go east for a little bit, but the other big thing, we're not developing, like there's a lot of, for example, agricultural land that is not getting used for development and will never get used. So as we continue to pile in more and more people, as we continue to talk about going from 400,000 to 500,000 new immigrants here by 2025, where are these people going to go? Number one. And two, if they do want to buy, they are going to be competing without a doubt. We haven't seen the demand for housing in Vancouver, certainly Vancouver specific. Yes, it's peeled back. It's a bit more normal in a sense, but for a very short time. And people need to see that, because there is a tidal wave of people coming here. And that the Liberal government is doing this because they're talking to the greater economy as a whole. In order to keep the greater economy moving, we need more people. We have a massive amount of people that are retiring as well. So you've got a number of different effects taking place within our micro market, not necessarily the market, across the nation, but in our micro market that's splitting at the seams. We there's a reason why we have a new mayor who wants to build towers that typically take 6 years in Vancouver and bring that down to 1. We're talking about bringing in templated designs for laneway homes so that they can rubber stamp them and get them built. That's where we're at now, right? So, we really talk about why prices have only come down 8%, and now we've seen 2 months in a row of them going back the other way, because buyers are starting to recognize that maybe that influx of inventory they were hoping for isn't going to come, especially when you consider the flow of credit that's happened over the last 2 years. It was super cheap. So people went and got their free money and they leveraged themselves, right? And they've locked in those rates. So why would anyone give up their house at 2% when they would have to go and get refinanced at 7%? It's not going to happen.
This is all being largely done by design as well. Don't shoot the messenger here, but it's becoming more and more common knowledge that the government is intentionally putting more people into the country than there are houses. It's been going on for 3 decades. Look it up. And there's a reason why housing prices are propped up and why that is still part of the conversations they are having today when they're hitting record immigration targets and then saying, cool, let's do that again. Let's go even bigger. At the same time, they know large projects are being defunded or not funded rather. And there's a big pullback in construction because, again, demand is low for most of Canada. So you can see where this is going. Now, to expand a little bit more on how different Vancouver operates, there was just some data released about pre-sale numbers that happened in Toronto last month.
Oh, this is terrifying.
Right. So, okay, yeah, brand new homes, not resale, but brand new homes. There was only 45 that sold last month. Right, and this is in a geographical area with 6 million people. So 40. It's nothing. I think it was a 98 or 96% drop off in new home sales compared to the year before.
Yep.
And then when it came to pre-sale condos, there was around 250 that sold in the same area with the 6 million people. Then we come to little Vancouver, and last month I personally know of just 2 releases that happened that are condos that sold over 250 units just last week. And Toronto was 4 times the size?
At least, yeah.
Of Vancouver. You know what I mean? So it's like we're this tiny little area and yet we're outselling the crap out of something that's way bigger again. And that's just gives you one example of what's happening here. The demand to live in Vancouver is still insatiable. Big money. I know we haven't talked about this in a little while. We did this a lot a couple of years ago or a year ago.
Yeah.
The amount of big money coming into the city is immense as well. And what I mean by that is last month alone, there were 25 homes that sold in Vancouver over a $5 million price tag. That's essentially, they averaged 6.8 million was the average home over 5 million that sold, including a beauty on Point Grey Road for $20 million. So there's essentially an average of 1 home a day at 6.8 million selling right now in this market. And I'm almost seeing what's happening here is what happened in Whistler. I grew up in Whistler from 1987 to 1996. When I left in 1996, the average home price was $300,000. That was 26 years ago. Prices have gone up 460% during those 26 years to an average now of 1.4 million, with detached at 2.6 million average. And if you look what you can get for 2.6 million, it's pretty average. Shockingly. No, it's embarrassing. It's sad to say.
It is.
Whistler,
but you're right,
has unquestionably become a playground for the ultra wealthy right now. Imagine a 460% increase in 26 years. And the reason I'm sharing the story is because we're getting similar feelings to this in Vancouver. Vancouver is becoming, unaffordability has been here for a decade plus.
Yeah.
Subjective, but yes, it's more unaffordable now today than it's ever been. And again, don't shoot the messenger, but it is becoming a city for the rich. And it's not fair, but there's nothing stopping it. And in fact, they're throwing fuel on the fire here. So as of right now, that trend is only going to continue, and the data is speaking to it wholeheartedly.
And with the cost of land being so high, developers cannot produce a cheaper product. That's the other point. You're almost handcuffed. So if your cost of land acquisition is already half the cost of your dollar per square foot in terms of finished product, how do you build something cheaper for people when it's already so expensive just to acquire the land to do so? It's a conundrum, right? And it's a very difficult position to try and, or a very difficult question to try and solve. Affordability, ultimately, it has to kind of be solved on the income side as well. We haven't seen, 460% in 26 years. We certainly haven't seen 460% in terms of returns on income in that time frame. We've probably seen less than 10%, generally speaking, right? So it's like you said, the wealth effect here is very different than where it would be in anywhere else in the country. And to that point, let's talk about how long property is actually sitting on the market, because that's going down, right? That is going down now. Where it was rising for a little while here, it kind of plateaued, and we're at 14 days on market now. So the average property takes only 2 weeks to sell in a consumer market where consumers feel their level of confidence in the housing market was at the pandemic levels, the height of the pandemic, when everyone was thinking about raiding liquor stores and not going to work, not sure how they were going to get out of this. That's where confidence is in the marketplace right now. And yet we're selling houses in 14 days. So the pressure is real. And like Dan said, there's a lot of money in this city. And some of them are willing to buy now because they're going to go a long way with it. And that's what people are up against.
Mm-hmm.
Anyhow.
Yeah, exactly. Yeah, Ryan mentioned, sure, it's an outlier, but yes, we sold a nice 2-bed condo in Burnaby in 1 day over ask.
Yeah.
Sight unseen.
Yeah.
Total outlier. But again, these things, I follow a lot of realtors, obviously, on Instagram and the other social channels. And you get that early tingles, like that sense that, man, things are shifting again. We're seeing higher activity levels. We're seeing, again, days on market dropping. We're seeing prices increasing. Like, you can feel it right now. And again, it's a month, right? We're not saying this is the trend, because I firmly believe that all the interest rate hikes have not taken full effect into the housing market yet. But Vancouver is different, and the numbers don't lie, right? They're seeing it here.
To that point too, Dan, just lastly, we also did a deal a couple weeks ago, closed a couple weeks ago. It was a commercial deal for a warehouse, a 50-year-old warehouse for nearly $6.7 million. And there's zero inventory of that product around. And on top of that, the financiers are so bullish about their business that they're financing that at 95%.
Wow. Incredible.
So you got to look at all these different indicators, because it's not just one thing that influences. It's not a homogenous sector that just influences the overall price of real estate. There are so many things that are taking place right now, and so many demand levels that exist in our economy that are being suppressed through the restriction of the flow of credit. Once that goes away, all of these issues that we had before are coming right back, and they're going to rear their ugly head sooner than later. We're not stopping bringing anyone into the provinces here, or anyone into the country. We're continuing to do that. And in fact, in the next 2 years, more money is coming with those people, because there's going to be less refugees, less family members, more trades, more skilled workers, and more people with money that are going to be coming to our country. And the economy also needs that, generally speaking. But think about how that's going to affect housing.
A lot of people often ask, okay, yeah, sure, lots of immigration here, but they don't have money. No, not very true at all. The amount of clients that we have had in the last 5 years that are just waiting on PR so that they can buy is pretty immense. And these are not coming in and buying 400K studios.
No, these are people working from major tech companies.
What's that?
They're working with major tech companies, right? These people are making six-figure incomes, and they're just parked in a rental right now until they can buy.
Yeah, a lot. I don't have figures exactly, but we can, talk anecdotally here that a good number of the people coming into the country are coming with high-paying jobs.
Oh yeah,
and with the jobs waiting for them. They're not coming here and being like, "Cool, where can I work?" It's like they're being, brought into the country with the jobs waiting.
Dan, wasn't so long ago, there's 1 million job vacancies here in Canada, right? Yeah. There's no way that we solved that problem either.
That's true. Yeah, it's rolled over a bit, but I think we're sitting at like 950,000 active job vacancies in the country right now. No wonder people want to come here. People go where jobs flow. That's one of the many anecdotes you get from RAIN, our Real Estate Investment Network. But it's true. It's the baseline fundamental of where people will go. Where can I earn money? And right now, Canada's saying, we're here and it's easy to get into the country. Yeah. And hey, they've upped their targets and they keep beating them. So again, if the government wants to do something, they can. Okay, let's quickly give a bit of an overview of what to expect next here, kind of a 3-month foresight. We're going to see in November, in December, really low sales volumes as well. Sub 1,800 units is my prediction. And again, with prices, you're not going to see prices move more than 1% on the HPI for about the next 2 to 3 months.
Are you calling a bottom?
I'm calling things are going sideways. Things are flat. Is that a bottom? Potentially. Again, Vancouver continues to amaze even me.
Yeah.
Who lives, breathes, sleeps, and bleeds real estate. But my goodness, here we are. So right now, I got a 3-month prediction of absolute flatness as far as, again, HPI.
Every other indicator points that. It all points to that, And I do think that whatever it is we're going through right now, the cycle correction, it's temporary. Everything is showing that it's temporary, and the government's actions are going to follow that it's temporary. That's the other thing. The central bank, we'll see what happens here. But like Dan said at the start of the episode, they went from 100 basis points to 75 to 50. I do think that their target rate is still much higher than where they are, but I think getting there now is going to be more like a sequence of maybe 3 to 4 rate hikes at 0.25, 0.25, 0.25. As it gets much more difficult for the Bank of Canada to continue down this path of excessive rate hikes without breaking the economy. So it's going to be a very interesting time.
Good point and good place to wrap it up. As a quick reminder, we help clients, we help realtors. If you are one of those, please feel free to reach out. We've got links below. We'd love to talk. It is free for the first consultation. So have a great day, and thanks as always for tuning in.